NIO, the well-known EV maker headquartered in Shanghai, China, is the quintessential comeback kid. Their stock has been spoken about on the internet very much. After nearly going bankrupt in Q1 of last year, NIO rebounded and closed out the year up over 100 times, a truly historic achievement and worth a closer look. NIO released their earnings report in late March, which allowed us to review, validate, and predict risks. Before we get into the video, please share your thoughts in the comments and use the thumbs up feature. It would help YouTube suggest the correct videos to you and helps the channel to understand our audience. Feel free to subscribe to always get our latest videos. NIO is one of the big three in the EV segment in China, with competitors including Li Auto and XPeng. NIO specializes in manufacturing smart premium electric vehicles with driving innovations in connectivity, autonomous driving, and artificial intelligence. The company is best known for pioneering its battery-as-a-service (BaaS) model, which reduces the upfront cost to the customer while continuously improving the user experience. The company sells vehicles through their own sales network with company showrooms called NIO Houses, which are branded as clubhouses for the users with multiple social functions. NIO is also rapidly expanding its charging infrastructure by investing in its battery supply chain and supercharge network. NIO in Q4. NIO delivered stellar earnings in Q4. The company had steady increasing deliveries, a stable average selling price, improved material cost, and increased manufacturing efficiency, all of which led to improved margins. Company revenue was 6,641.1 million renminbi, or $1,017 million US, which shows a 133.2% jump compared to Q4 2019, while also showing a sequential improvement compared to the previous quarter with a 46.7% increase. The company achieved a new record for quarterly deliveries with 17,353 vehicles delivered in Q4. NIO's operating costs were down substantially thanks to strong vehicle margins. Vehicle margins were 17.2% in Q4 2020 compared to -6% in Q4 2019. Thanks to the increase in delivery volumes and the decrease to the cost of some raw materials. Thanks to strong margins, the company also reached positive cash flows from operations for Q4 and financial year 2020. Expected results in Q1. Total revenues for Q1 are expected to be between 1.13 billion and 1.15 billion, which is an estimated increase of 11.2 to 13.8% compared to Q4. Based on management estimates, the company expects to deliver between 20,000 and 20,500, which would be an increase of 421 to 434% compared to Q1 2020 and a sequential increase of 15 to 18%. The company has carried its strong Q4 momentum into 2021 and is on track to achieve Q1 deliveries. NIO delivered 7,225 new vehicles in January and 5,578 vehicles in February. NIO's plan in 2021. The company is planning to launch its flagship sedan in 2021 called the ET7, equipped with an immersive digital cockpit, autonomous driving capabilities, and efficient powertrain. The company is using its in-house full-stack autonomous driving technology with the ET7, which will be equipped with the company's Aquilia supersensing technology and its supercomputing suite called Atom. NIO Aquilia supersensing system has 33 high-performance sensing units, including 8 high-resolution cameras and a LiDAR sensor with a radius of 500 meters. The sensor suite, along with the computing power equipped in Atom, will provide a more safe and relaxing autonomous driving experience from point A to point B. In order to capitalize on this, the company is planning to offer its autonomous driving through a monthly subscription service to expand its reach to more customers. In addition to launching the ET7, the company is planning to broaden its sales network in 2021. The company plans to open 20 new NIO houses and 120 new NIO spaces in 2021 to further expand its competitive edge in direct sales. Currently, the company has 191 power swap stations in 76 cities, but expects to expand this to 500 power swap stations by the end of the year. In addition, the company also plans to upgrade its power stations to Power Swap 2.0, which will offer a better experience at lower prices. The company is also expanding on its supercharging network, expanding it from 127 power charger stations and 1,700 destination chargers to 600 power charger stations and 15,000 destination chargers by the end of 2021. Financials: NIO delivered 43,728 vehicles in 2020, which was an increase of 113% year-over-year. With their strong lineup of e-SUVs, the ES6 and the ES8 have become the leading offerings in each of their respective classes. The company generated $2.49 billion in sales in 2020 as compared to revenues of $1.12 billion in 2019. Gross margins have also improved to 17.2% in Q4 as compared to negative 8.9% in 2019. The company's overall cost-saving initiatives and improved operational efficiency also contributed to the decrease in operating expense. NIO R&D expenses have also decreased by 19.2% year-over-year as the EC6's R&D finished process before Q4. NIO's strategy in 2021 is to acquire more orders through expansive services, including wider sales networks, a vast network of supercharging and swapping stations, and after-sales services. Valuation: NIO is expected to ramp up production in 2021 thanks to its partner JAC having started its production capacity expansion in the Hefei plant. The company is expected to expand its annual production to an estimated 150,000 units by the end of 2021, with total sales forecasted to be around 100,000 units. This would suggest an impressive 228% increase in sales if the company can deliver on its promise. Currently, NIO trades at similar valuations as compared to Tesla, with forward price to sales at 12.52 as compared to 13.59. While valuations are trading at a premium, if NIO can continue to grow at a breakneck pace, it could eventually become a leader in the Chinese automobile industry and justify the premium on its stock. Investment risk: although deliveries are strong so far in Q1, growth is muted thanks to the constraints in chip and batteries. Manufacturing is also expected to slow down by Q2 due to the increased shortages and weaknesses in the chip market. NIO is currently looking to produce the chips themselves as well as sourcing the chips to other manufacturers. A combination of this should alleviate the risk of the supply chain. R&D expenses and heavy capital expenditure are also expected to be a cause of concern for existing investors. If delivery volumes don't improve substantially, expenses could bring down margins in the next few years. This, coupled with a planned expansion into Europe, is expected to increase the cash burn in the short run. Conclusion: NIO posted higher than expected revenues in Q4, closing out on a strong 2020. A side benefit of the strong delivery volume was that vehicle margins improved to a record high of 17.2%. The company also expects cash flows to be positive from an operating perspective, which is a sign of solid footing in the capital-intensive EV market. NIO has strong momentum going into 2021, carrying right where it left off in 2020. Vehicle sales continue to grow sequentially, while the only thing holding back sales is the shortage of chips. NIO's power segment should also be a value addition for customers and an attractive long-term recurring revenue opportunity for the automaker. NIO's plan to expand its sales strategy by expanding direct-to-sales while also consolidating its online traffic will help improve the user experience and the efficiency of all sales. NIO is not only building a car, but also a brand. With a deep focus on the social community of users, NIO is cultivating an experience. User loyalty, an invaluable asset in the industry, is still at its infancy. The combination of quality and innovation will give the EV manufacturer staying power in a highly competitive space. What are your thoughts on NIO? Do you think they're a good investment? Would you buy their car if it gets available in your country? Let us know in the comments down below. If you made it all the way until here, thank you so much for watching. Don't forget to subscribe. It's free and reversible anytime. Hope to see you in the next one.